Well, our next guest says renewables could be in a double sweet spot, rapidly increasing demand and, of course, interest from investors. So let's get more. Michael Frazis from Frazis Capital joins us here at the desk now. Pleasure to have you on the program.
Thanks so much for having me on again.
Well, talk us through renewables because it's an interesting space and one that you say is in a double sweet spot. Why is that?
Yeah, so the double sweet spot is basically you've got intense demand from people actually installing solar panels, both in retail and also governments deciding they want to have solar as more of, on renewables as more of the energy mix. The second part of the sweet spot is investors want to invest in these places. Who wants to invest in a coal company today? There's intense investor demand for these stocks. So it's not one of those things where you're looking for a catalyst or a reason for people to own it. I mean, huge amounts of capital are pouring into ESG, ethically responsible funds. And much of that is going to go in the handful of leading companies in the solar space. So they're really growing very, very fast. Some of them have market-leading positions. And there's also intense demand for their shares. So it's a very interesting space.
And in that space, does that mean if there's a concentration of assets that those are likely to even accelerate higher? Because investors, they don't really have that broad choice right now. They want to go ESG, they want to deploy that money, but there aren't that many choices, at least in the current times.
Yeah, I mean, well, I think on the shares have performed very well, but I think the demand has really surprised everybody as well. In many cases, that's growing even faster. So I'll give you some examples. For example, Enphase in the United States. They basically make inverters which convert, I guess, the DC power you get on a solar panel to the AC power that you need in a home. And these are software enabled and they're very smart and they're panel by panel. So traditionally, all the panels would be in a row. There'd be one inverter. If something went wrong with one of them, you would have to effectively, fix the whole lot. And there's only two companies that are really market leaders in that space. And these are some of the companies that are doing best in the current environment.
Who else can you get exposure to? And things when you look at some global exposure, where are you seeing geographically the best exposure to these sort of businesses?
I mean, it's probably two leading companies in that space. It'd be Enphase in the United States and Solaredge based out of Israel.
Okay.
But really the reason they're market leaders is there's been so many booms and busts in solar. Huge amounts of overcapacity, prices rise, prices crash. But the people who install the panels have ongoing obligations. They have to keep these things working for decades. You think about what a solar panel is, it's on the roof. Freezing, rain, hail, everything kind of hits these things. So it's very hard to keep them running. And so the installers who generally make the decisions over which technology they're going to use only want to stick with the market leaders that they know is going to be there to answer a call in 10, 20 years. So a really interesting space. And those two companies are the clear market leaders based out of Israel and the United States.
And how much opportunity then is there with the installers? If we're going to look at all parts of the vertical chain, are there opportunities for investors to really own that full part of the cycle? Of the
I mean, Solaredge is probably a broader offering. So if you wanted to get more of the kind of a more broader exposure to the space, it might be a better pick. Enphase is a lot more targeted, and in some ways better if you want that targeted exposure. I mean, like all value chains, the values are going to end up accumulating at certain parts. So in some ways, you're probably better being more specific, I think, rather than less. Some of the installers will actually go through that boom and bust cycle irrespective, whereas some of the part suppliers might not.
I know one of your core thematics is obviously e-commerce, software, technology space, which is actually one of the sort of areas that I guess have benefited from the COVID-19 pandemic.
Yeah.
What are some of the key stocks that you like in this area that people can
in the
invest
e-commerce space? Well, I guess there's the market leaders of Seed, Pinduoduo that we've talked about here before, Mercado Libre. The interesting thing about e-commerce is as places have opened up, e-commerce has stayed, as a percentage of sales, has stayed really high. So it looks like that shift was permanent. You can actually look at the data and see that.
Yeah.
There's many other opportunities overseas. For example, Carvana is a market leader in doing used cars online. So you can basically order a car online and get it delivered effectively the next day with a kind of 100-day warranty.
I just want to ask, because you remain invested in these stocks, but is there still room to get in for investors who perhaps haven't dipped their toes in yet?
I think the underlying companies are growing at 70 to 100% in some cases. So even though the prices might be up 30 to 40%, there's a long way to go for these companies. And if you think about how well e-commerce providers like Amazon performed, if you bought those 10 years ago when they're growing at 60 to 70%, it was an extraordinary positive decade. In many cases, these companies in other parts of the world are at that level, where there's still an extraordinary shift towards e-commerce. And in many cases, they're in very fast-growing economies as well. So again, you're getting a double whammy, a double benefit.
And we've really seen that change in sentiment. The stocks that were the growth plays, the aggressive plays, they're now even being looked at a bit as a recession-proof stock. They're even defensives in a way because they can handle an economy that is not face-to-face. They can handle an economy that changes the way that it operates and behaves. So are they really now the sort of bellwethers, if you will, of the way an economy operates.
Yeah, I think the defensiveness is really interesting, and that's something you've seen pretty much in every crash, whether it's 2011, 2016, 2009. I think the reasons for that are that they're able to grow throughout the crisis. They're not cyclical. They're able to add users, grow revenue. So obviously there'll be technical factors. When investors hit the sell button, everything's going to go down. There's no way around that. But when kind of people start looking around, okay, what do we want to own? Where are we going to put our money to work in a recession? I mean, these are companies that are still growing. So where do you want your money in a recession? Do you want it in a cyclical where a 5% fall in revenue could wipe out their entire profit? Or do you want it in a company that's bigger, better and stronger than it was 6 months ago? And I think investors are clearly moving in that direction. I mean, there's other factors as well. I mean, typically in a recession, interest rates will go down. Now, these are growth companies. Much of their value lies in the future. So lower interest rates actually increases the value. And you saw that over the last week as well. As rates went down in the US, software and all the overvalued plays, absolutely ripped. So in many ways, that's something that's going to, you've seen it in the past and you expect to continue in the future.
Does volatility concern you, or does it change your strategy at all? So when you see sort of the moves that we saw last week, which could have potentially led to a bigger correction, it hasn't yet. Fingers crossed it doesn't, but if it does that change your strategy at all?
I think like many people, we're holding a little bit of cash. So if anything, you're buying on these dips. But really, I feel like we've got the range now. Think about how scary things were in March. London was being shut down, New York was being shut down. That was terrifying for everybody.
Yeah.
I feel like it's very unlikely, in my opinion, and I could be wrong, but it's very unlikely we get anywhere near those lows. So it's worth keeping that in mind in these big down days. It'd be very unlikely that we go back to where we were.
But then we look at stocks like Tesla trading around that $1,000 mark in the US. I didn't quite see where it closed overnight, but ultimately these are stocks that have rallied significantly. They're part of that cleaner energy play. They're part of the EV story. Do you think these are sort of stocks that people should be looking at closely?
I mean, we own Tesla. We didn't buy it at these prices. We bought much lower. I think, it's people talk about why is Tesla valued so much more than other car companies.
Even Elon Musk's asked the question himself.
Exactly. If you think about it, the Model 3 now is the number one selling car in the UK for the last 3 months.
Yeah.
You think about what happened with Apple. I mean, there were so many different smartphone providers. They all made no money. They competed on features. Apple was able to charge a premium and they captured the entire profit margin of the whole industry. Now, there's a very good chance that Tesla, with a premium brand, can do that. They'll charge that little bit more, and that little bit more will be their entire profit. And everybody else with electric vehicles will be scrapping around for the rest, competing on features, competing on range. They've really got this market-leading position, this market-leading brand, and you just can't create these things. They're very, very difficult to create. Once you've got them, I guess it's yours to lose. There's no doubt that if you want a nice electric car, you can go for a Tesla today.
Yeah. All right, well, we'll leave it there with you. Lots to ponder, I guess, from that, particularly on the renewable space. Thank you very much for joining us on the show.
Thanks so much for having me.
Great to speak to you.